part of Chapter 3 about Social Security taxes. We're going to focus on the part where Social Security taxes are withdrawn from the employee's check. This slide talks about the various acronyms that are used both in your textbook and through this PowerPoint. OASDI stands for Old Age Security and Disability Insurance, and that is the formal name of Social Security. So OASDI or SS for Social Security may be used either way. HIs, hospitalization insurance, also known as Medicare. So either one of these might be used. FICA is Social Security, and Medicare together is under the FICA Act that we learned about from Chapter 1. So if you see just the word FICA, it means Social Security and Medicare, okay, of employed workers. SECA is the Self-Employment Contributions Act, and that's the Social Security and Medicare for the self-employed people. EE stands for the employee, and ER stands for the employer. Okay, so FICA, as we learned in Chapter 1, is the Federal Insurance Contribution Act. Part of it is paid by the employees, comes out of the employee's check, and the other part comes out of the employer's pocket. 6.2% for Social Security and 1.45% for Medicare. Okay, SECA is the same thing, but it's for self-employed people. And since the self-employed person, you're like the employee and the employer together, so you have to take out double. So 6.2 and 6.2 together is 12.4% for Social Security. And then the 1.45 and another 1.45 is 2.9% for Medicare. But that's taxed on the net earnings, so that means after you've subtracted expenses. So you take all your sales of your business minus all your expenses, and what's left over, the net income or net earnings of that self-employed person is going to be multiplied by 12.4% for Social Security and 2.9% for Medicare. Okay, there are three issues that always have to be considered. Are you an employee or are you an independent contractor? If you're an independent contractor, you got to follow the SECA rules. You have to calculate that yourself and pay those amounts to the IRS. If you're an employee, then the employer will take out your half, your 6.2%, and your 1.45% out of your check. And then the employer will match that for you. Is service rendered considered employment? Okay, so you have to, again, this is trying to get down to which of these two laws does someone fit in? Okay, so there used to be a large test, but mainly what you're looking at is to be in a common law relationship, that you are definitely an employee or you're definitely an independent contractor, self-employed, is how much control does the employer have? So at OC Tech, we have people who do various maintenance things and mow the grass and stuff, and those people wear a uniform that says OC Tech on it. They have to come a certain day, leave a certain day, have their lunch at a certain times, all that kind of stuff. A lot of control is over those people. And we have a separate company that comes and takes care of the flowers that are out along Highway 601, along with the rose bushes and things in the courtyard area, things like that. And those companies, you know, they're paid a flat fee by OC Tech to make sure that everything looks nice. They come and go whenever they want to. They use their own equipment. They have their own subcontractor people that they pay, etc. And so they are not an employee. They would be self-employed, and OC Tech would not take taxes out of those the way they do out of their own employees. Now, there are certain occupations that are specifically covered regardless of whether they pass that common law relationship. An agent and commission drivers of food and beverages, full-time life insurance salespeople, full-time traveling salespeople, and individuals working at home on products that the employer supplies. Okay, there are various specific situations that are involved, and you can take a look at this slide when you get a chance. One thing is household employees, and they're talking about someone who's like a nanny or a maid, not somebody that comes once a week to clean the house, and they have other customers where they clean house for them. But somebody that like is there all the time cleaning the house. So if the household pays that nanny or that maid at least $2,400 a year, and that nanny or maid is under the control of whichever house it is they're working in, then they're an employee as far as taxes need to be dealt with. Okay, the employer has to pay their share of FICA, but they can report it on the 1040. There are certain ministers and religious practitioners that are exempt from the whole payroll tax thing. Okay, this slide is looking at which things are considered taxable wages. So any type of cash that you get, in other words, you get a check or a direct deposit into your checking account, okay, that's considered wages and salaries, and that includes any bonuses, commissions, vacation pay, anything else like that that you get paid cash for, okay? The cash value of meals and lodging provided for the employer's convenience, fair market value of non-cash compensation. Examples include gifts, stock options, fringe benefits like personal use of corporate car, prizes, premiums on group term life insurance that's over $50,000 policy. So, and we'll go, chapter 2 goes through a number of those things. So we've already discussed them. Okay, these are when the employee makes tips, and if they have tips more than $20 or more a month, then the employee has to fill out a form by the 10th of the following month with the employer, and that shows how much tips that they are recording, that they're claiming that they received. Okay, the employer has to calculate out the FICA, remember that Social Security and Medicare, on those tips that were recorded, that were reported by the employee. Okay, the employer has to match that same FICA on those reported tips. Now, if it's a large employer, meaning they have 11 or more employees, they have to allocate tips. If the reported tips are less than 8% of the receipts of those tables. So let's say you have a restaurant and a particular employee, waitress or waiter, claim that they only received X number of tips, and you take the gross sales of all of their tables that they did and multiply it by 8%, then the tips that they're reporting should be more than that. If they're not, then the employer still withholds FICA based on whatever was reported. However, these allocated tips, the 8%, is going to be told to the IRS. So the IRS is going to know that this waiter or waitress possibly is underreporting their tips. So if you are receiving tips that are less than 8%, you should make sure that you write that down, maybe keep a journal, especially if you're in training mode or there's some other reason why you're not getting enough tips. If you can be able to explain it to the IRS and show that you were keeping up with that, then it won't be a problem. Okay, but those allocated tips are going to be right on the W-2. So the IRS is going to know how much is the minimum that you should have reported. Okay, here are some different kinds of things that you might receive that are specifically exempt from having Social Security and Medicare taken out of them. So if you receive meals and lodging for the employer convenience, okay, so in other words, your employer wants you to do something and they end up providing you, paying for your meals so that you are capable of doing that thing. So when Dr. Dooley goes to an accounting conference, and if I have to go out and pay for my own meal, wherever that is, I couldn't have, at home I could have done my own thing, but now I have to pay for a meal. Well, OC Tech can pay me back, and that won't be considered wages. It won't be added to my W-2. Sick pay, after 6 consecutive months off, because maybe you're really sick, you're in the hospital, whatever. After 6 months, typically insurance will pick up, giving you some kind of wages, and if that's the case, then no FICA comes out of those sick pay wages. The first 6 months that the company is paying you any sick pay, then FICA does come out of that.